Good evening, I'm Giuseppe Basile. I'm the analyst and trader you can find at the website www.fibstalker.com. I also post regularly on Twitter using the @fibstalker nickname. Good evening, today is Wednesday, June 11, 2014. It's almost midnight in Toronto. And in this video I'm going to review for you all the markets. I'm going to go into details in the 15-minute chart. So there are a lot of opportunities out there. I think you should look at the majors, forex majors carefully. And so without further ado, I would actually start. There is a lot to review here. This is the daily chart of the euro dollar, and those who follow me will remember that I used this level here to trace well in advance this from the move we had on Monday. This short here, and the market has a first target at 134.30 area here, and this today I have actually mentioned a very important measure move. I'm showing this to you on the 15 minutes here, but in the past I provided this extension shorts with participation starting at 135.51, and I mentioned that there was a level there. I indicated 161, 162, and price never went above that level. 135.60 would be the right level here if I consider the price that I get from my platform here. So we saw participation at this level, so this level is important and it's there. And after that, the market did not follow through, did not continue to previous low. So there's not a possibility that this market is going to retrace. And if we get above 135.59, 135.60 here, there is a possibility for this market to retrace all the way back into the 136.68. Is that a long? No. It's a profit-taking event, and I would actually target if we get above 135.60, I will actually target in long the 136 area. Of course, this market can go higher, but I don't believe that is going to break above this 137.06. I think that with this 136.68 will act as a resistance again. So you don't have problems if you shorted higher here, because at most I think this market will retrace at most, but I don't think it's gonna get there to the 137.48. Again, the level I'm gonna watch is 136.70. That's where I believe this market will stop if we get this profit-taking event and move higher. Moving to the SP 500, and you know that on the SPY this market has reached already this level. It's not there just yet, so it's possible for this market to move higher into 1953. It touched already the relevant the corresponding level on the SPY, the spiders, the SP 500 ETF. So it's possible that when we look at the 15 minutes, it's possible that the sequence of measure move on this time frame has failed already, and let me show you why I think so. Because this market has been lately moving in extension from highs to highs, as we can see at the first target, and then again first and second target, then you continue higher. And when we look at the next extension long here from highs to highs, from highs to previous highs, we got again first target hit. So when we trace this again, we go from highs to highs again, and as you can see the second target was hit, and after that there was a violation of the sequence of measure move here. So so this market could have actually started a move lower, and the entry would have been this very aggressive, this 1944.25 or 50 here, with a stop above 90.47.50 here. So there have been only 3 points And where this market can go, well, we can actually trace, as we know, all the way into the next measured move, right? And we know that this measured move comes from actually previous highs to new highs, and this level is previous highs at 1890. So be very mindful about that. That's where this market could be headed. Moving to the dollar index futures, you will remember I have indicated after we saw this bar lower, the same trace opposite direction for that we have in the euro. So again, it's possible at this level the 80.39 is going to be retested. I'm not going to elaborate more on the dollar index because you can look at the euro dollar chart and just reverse it. There's no need to do additional analysis on this instrument here. Moving to gold. Gold initially has respected this level here, the 1260, and now it's actually piercing above this level. So if we consider the sequence of measure move where this market could go, it actually could go to trade the next sequence in the next measure move in this sequence here, and this would be 1285. This is the if we break above 1266 here, that's where we are going to go, and that's the minimum target. Because I want to bring to your attention one thing. On the larger time frame, this market is showing a potential correction, and if we look at the weekly time frame, if we look at this move on the on the 240 minutes here on the daily, we can see that after all this market could be moving in a consolidation, and the reason for that is that short were failed here, then long failed. So we are actually on the larger time frame, we are in a consolidation here. And I don't use trend lines, I just use this to highlight the potential consolidation. And the reason why I highlight that is that if we break above 1296 here, there is the potential for this market to go higher, but that would only be an opportunity to sell this market. So, and that level could actually be, for example, the 1314. But we don't have to guess. You know, I never guess the market. I let the market tell me where it is going, and the way I'm able to do that is looking at the sequence of measure move that is brought about by program trading in the market. So that's the way I use to know when a sequence has completed, and when it has completed, then we have a reversal. So I will just wait for this market to complete this correction, and then there is going to be a good opportunity to sell short gold again. Moving to the US dollar versus Japanese yen, on the daily chart, you will remember that I've indicated a level of an area of resistance rather, and that's the area at 102.70 here. And this market initially traded the next measure move higher, but then failed, and actually it had failed already. And it went to trade all the way back at 101.81. Now, if we study the 15 minutes, we know whether the long has been confirmed or not just yet. And as I'm going to show you, the long has been confirmed, because we can look at the sequence of measure move, either using the highs or the more recent highs here, and we saw participation at this level 102.40. On the downside, your price into first and second target, and then this action long failed. So at the moment, this market is actually, as it pierced above 102.07, so 102.08. This could be an entry long with a stop below lows, and the reason for that is this market is still in a sequence of measure move long. Now we have a short here, and the all the way back long has been confirmed on the 15 minutes. So there is at least a possibility for this market to actually go to the level that we identified by choosing from highs to lows. So this would be the 102.33, and this can give you a free risk trade here for this market. Okay, and moving to the euro versus Japanese yen, this market is actually in a move lower here. We indicated this, I indicated this level. Congratulations again to those who took the short here, which was confirmed with a pierce on the 15 minutes, and we had an initial confirmation, and then you will remember that I mentioned that we could use the sequence of measure move that we were witnessing in the 15 minutes, and I traced these two sequences, and then I provided a very good entry point here, which was the pierce on the downside of this level, the 139.78, with a stop above ICE. You can go and review the previous videos and the weekly videos, and if you want to get the weekly reviews on which I give a lot of information what the market are doing, and also a lot of potential setups like this one, you can actually subscribe the newsletter. You just go to www.fibstalker.com and subscribe for free. So as you can see here, 139.78, 140.08, it was actually a 22 plus 8, 30 pips trade here, and it already gave you probably 1, 2, 3, 4, 5, and almost 6 reward to risk here. So if you're risking 1%, this is a 6% reward trade, which is not too bad actually, just for one trade. And this is the potential of the money you can make using my method, using the fib stalking technique for timing, and the fib stalker method to identify these levels. So what can we look at in this market, or see in this market now? We have two levels to watch. One is the 36, 37 area here, which would be the profit taking, and this would be a 9 or 10 reward to risk trade. But also we have to watch what's going on the smaller time frame, and take profit out if we see the market actually not responding as we anticipate. And that's, if that happened, that would still be a 5 reward to risk. And actually here we saw the price moving into the second target, and then the extension short failed. So this is the exit for this market. If you didn't exit this market, you should, if it comes back, because this market could now reverse and move higher. So you want to lock in your profits here, because this market might not go to 137. Moving to the pound versus the Japanese yen, what we have here is the market which came into this area of support. The area of support, it's on the daily, and it traced from lows to highs here, from lows to highs. And again, we studied the sequence of measure move on the smaller time frame here, and we look at what was going on, and it's quite interesting, because when we study these measure moves, you can actually see whether the sequence is still intact or not. And as you can see, first target here hit, and then we go to see the second target here, which was not it. The market came above this again, but as you can see, the sequence has failed. So if we see this market moving lower and then reversing, that is going to be an entry. The actual entry was at 171.47. So You can buy it here or just wait and study the sequence of measure move lower, and when we get a reversal here, this is a long for this market. Moving to the euro versus Canadian dollar, again, congratulations if you took this trade. We had an heads up here, and I believe this trade is going into so let me trace that again. So this was an extension short here. Sorry, no, it was a continuation of the daily that I just removed here, and so we have target around 146, 115 here, 146.15, and that's where this market is headed. This market could continue also lower. The actual area that I traded is this one, and the market can go to, you know, to an area between 146 and 146.30, and that would be the first target. The second target will actually trade after that if this market is very, very weak. Moving to the pound versus US dollar, the pound confirmed the lower prices here, and even if it gets higher into 148, is going to be a reversal, very probably, so we can study the sequence of measure move higher. When and if we will get there, this will be another short for this market. So there is not really a lot to say here. Just the fact that this measure move 168.45 indicated in the weekend is actually working properly. The Australian dollar versus the US dollar has been quite strong, but I don't think that the outcome has changed. This market actually has a busted setup here, and it means that it's going to retrace, and I believe that retrace started here. As you can see, that's not only previous high. Here there is program trading which is taking profit out of a busted setup. So I think we're going to see this price moving lower very, very, very quickly here, and I will show you on the 15 minutes that the sequence of measure move has failed already. So should be on a short in this market, and this is exactly the level, and it's an extension from previous highs to highs here, and as you can see, the short is still possible and in place here. So you should take the opportunity to take advantage of this level here, and you know, even if it comes higher, that's a short. It's a short here with a stop above highs. And where we could see this market, well, I've indicated a level. That's the 093.09 would be the minimum level, but I believe that this market can actually continue much lower here. Also, this market is not still ready to go down. What I mean is that weekly and daily are still strong in this market, so this market could actually start moving lower and then again bounce higher before we see an actual convincing move lower. Sorry. And you know that I'm waiting for and looking for this market eventually to correct into 090.58, but on the weekly and daily time frame, this market is still strong, so we'll need to wait for that. But keep in mind that the 15 minutes has failed, so we're going to see at least a move lower into the all the way halfway back that I showed you on the daily here, this 093.10. After that, we have the US dollar versus Canadian dollar. Nothing new here. This market is moving lower as anticipated. It has traded all the way from this high to lows here, and after the market broke the sequence of measure move higher, we could enter here, and this market is now offering a 2+ reward to risk with risk-free trade. So congratulations. And finally, New Zealand dollar. That's a beautiful market, and you have to be very careful. I had people telling me that they would see a big move lower at these levels. And guys, the sequence of measure move on the weekly time frame for this market has not failed just yet. So there cannot be any strong move lower if program trading is not supporting shorts. So you have to be very careful here, and I hope that nobody is hurting himself or herself here shorting this market. It's not the time to short now. The target of this measure move higher here, 084.15, which I suggested since we saw these highs here. It's now almost 1 month, actually, at the beginning of May. More than 1 month, by the way. And it's actually got participation here. So where are we going in this market? Of course, we are going much higher, and we have the first target 089.50, so well above this level. So be very, very careful. Always follow the measure moves here. That's where this market is at. And look at this big gap. I mean, people are not selling this market. Actually, people are buying, and they're in a hurry to buy this market. So be careful here, and thank you very much for your attention. Thank you for sticking around for this video, which is a little bit longer today. And please subscribe my newsletter if you're interested, and you can get a lot of this information in the weekend as well when I do the weekly reviews. Thank you very much, and have a great trading day tomorrow. Bye bye now.